Welcome back. Indiabulls Housing is in focus. SoftBank has invested 2,800 crore rupees of equity capital in Indiabulls' associate company, OakNorth Bank. Ajit Kumar Mittal, Executive Director of Indiabulls Housing, joins in on the phone line. Good morning, Mr. Mittal. Thanks much. What does this do to the valuations of OakNorth? How is the entire entity valued, and what's your stake now?
Well, post-dilution, our stake would be down to close to 15%. We were around 19% prior to this round of funding. And the bank is currently going simply by the price at which OakNorth is picking up the stake. The bank would be valued at roughly upward of £2 billion. So roughly, you can say 2.7, 2.8 billion dollars. So based on that, as you might have seen in the release, Indiabulls stake simply going by the price at which SoftBank invested would be roughly 3,000 crore. Okay. Even at the price at which SoftBank is investing.
Fair. So, Mr. Mittal, the question is, your investment has obviously fetched good returns. Now, what do you intend to do? There's been enough speculation about whether a part of this 15% or maybe all of it is going to be sold at some point. What is the thinking?
Well, you might be aware about a year and a half back, we had partly monetized our stake. We had sold around one-third of our original 40% stake to GIC of Singapore. You know, we are not here for a very opportunistic reason. We are here to, see the bank grow to its optimal potential. And it's been a journey together. We, two of our colleagues, including myself and Mr. Gagan Banga, are on the board and are very closely, monitoring the bank. So this is one of its own kind. Is a truly digital bank in UK, and it's much more than just a commercial bank. As you might be aware that this is the first to offer, those artificial intelligence-based tailored solution for SME lending across UK and across the continent. So that also is going to be a very solid revenue stream. So we are patient, and we are going to wait till the IPO, which is going to be 1 year away or something. So this has been a commercially very rewarding sort of investment, no doubt about it, because at the time we sold one-third of our stake about a year and a half back, we recovered pretty much the entire investment we had made back 3 years back, along with some profits, as a matter of fact. Okay. So now we are in no hurry to sort of offload this investment. We are going to wait.
Can you just refresh our memory? What was the valuation of the bank when you bought that stake?
Well, we invested 650 crore in October 2016, a little more than 3 years back. So, which fetched us 40% stake in the bank. So, that one-third of that stake we sold about a year and a half ago to GIC, which fetched us close to 850 crore back then, maybe 850 and between 900 crore. Okay. I don't know, give or take a few. Okay. You can see it's been truly, incredible return on investment. But then we didn't look at it purely from an investment play.
Sure. We get that, Mr. Mittal. I think you made your point quite clear that you intend to stay on at least as long as IPO, if I heard that correctly, which could be a year away. Which brings me to the next question. Is there any thinking right now for any further capital raising exercise, any other, asset monetization? Are you looking at raising money at all?
Are you talking of Indiabulls Housing?
Yes. Yes.
Well, at the moment, there is no such plans because we do have adequate liquidity. From time to time, we do share with the media as well as the exchanges. We are sitting on close to 23,000 crore of hard cash. Of course, given the times that we are in, the lending is a bit, tepid. So at the moment, there is absolutely no reason for us to resort to any kind of capital raising. We have enough capital to, keep going for at least another couple of years.
Since we have you with us, has the Reserve Bank policy made any difference? Is it only sentimental, or will cost of capital come down at all, even by a notch?
Well, the transmission effect of RBI's monetary policy does take time to get actualized. So I do expect that the cost of funds would come down. May not immediately, but definitely it will take some time to percolate down.
And the other aspect of the policy, which was, not the monetary policy itself, but the fact that now risk weights are going to be aligned to rating agency ratings, basically.
Absolutely.
Does that ease out the availability of funds?
Yeah, that's a huge pragmatic and practical step, in fact, which is what we had been expecting for a long time. So this does have a differentiated approach vis-a-vis, different companies. So companies like us, which are AAA rated, would definitely have a, edge over others. And the matter of already our borrowing has been fairly competitive compared to our peers, but definitely this is going to make life a little more easier. I do expect at least 50 basis point reduction in the cost of borrowing for us.
You don't see any risk aversion among banks lending to NBFCs, do you? Some of the bankers on the channel said that.
Banks risk aversion to lending to NBFCs?
Yeah.
Well, what has been happening over the last 4 or 5 months is there for everybody to see. So I'm not denying that this has totally opened up, but definitely this announcement by RBI is going to really, encourage banks to at least, make a differentiation between different category of borrowers, and good borrowers with good pedigree and having excellent ratings would definitely have an edge.
Sure.
And banks would be comfortable lending to such
Absolutely.
borrowers.
Absolutely. Thank you very much, Mr. Mittal, for joining in and giving us all those factual details as well on your investment in OakNorth Bank and the appreciation of that investment over time. Well, that was the Indiabulls Housing Management. We have to get back to the markets and technical trades. We started off with a 0.5% cut. It looked like a recovery, but that recovery has gotten sold into. But what's perhaps more painful is the selling in mid-caps.
Yeah, I think that's clearly the indication that once again that mid-cap selling is back, Lata. And I think I take your point. Perhaps the market did get a bit overexcited about mid-caps yesterday, and that selling is back. For now, the Nifty is at 11,015, still above the 10,980. Anyway, we have Ashwani and Mitesh back with us, and Prakash Gaba also back with us. Ashwani, your trade was to buy the dip. Are you sticking with that, or you think this sign of a bit of a reversal here?
See, as long as you can say 11,000 holds on, that sort of, there is still a bit of hope. But the way it's showing recovery from 11,000, you can't be very hopeful. And the problem will start if, 11,000, 10,980 starts to get broken, because a lot of people are probably long thinking that this is a breakout. So if you are long, be careful if the market starts to give back 11,000, because had it been strong, it should have shown you a much better bounce back and a recovery. So that way, that is something to keep in mind. And obviously, Nifty next 50 is now down 240 points. So even there, the recovery isn't working out. So 11,000 should be your final stop. And once that goes, selling could accelerate given the global environment. Having said that, individual stocks, Raymond is a buy with a stop of 690, target of 725. Bata is a buy with a stop of 1185, target of 1240. And NIIT Tech is a buy with a stop of 1290, target of 1350. A few problems are there, like stocks which went up vertically. The tech stocks, if you see the IT index, it's standing almost vertically. If you see, Reliance, that's almost a vertical run. So unless, something else takes on the mantle, it'll be difficult for, market to stick at 11,000 given today's action.
Well, there's reversal coming in also on quite a few of the auto stocks that have had such a nice rally last few days. But today there's pressure. I mean, it's not just Tata Motors. Look at others, Eicher, Maruti, Bajaj Auto. Most of these stocks are down. The Nifty Auto is down 2.5% as we speak. Mitesh, what do you make of the morning so far and the trades now?
Yeah, yes, good morning, Surya again. I think the index is definitely going through some kind of a reversal, but I think 10,980, 975 was your breakout level. So I haven't attempted long as yet, but maybe around 11,000, 10,890 zone, I think, maybe you want to take some long exposure with a 30-35 point kind of a stop loss. See if the breakout level holds, and if that happens, then I think this was just a pullback, and we could at least hope for a retest of 11,100, which was the recent hourly high very soon. But with that, I think we are still trading with long buys as long as 10,980, 970 doesn't give away. I have two buy calls. Titan is a buy with a stop at 1057 for targets of 1100, and IndusInd Bank is a buy with a stop at 1507 for targets of 1565.
Okay, Prakash, what are you trading now?
Well, when I see the Nifty, it tells me, yes, we have seen opening the gap down and the recovery has not been good. But for me, the important level to watch will be 10,960. We get a breakout, and if a breakout is tested, it's perfectly okay. So I think these tips, I wouldn't worry as long as 10,960 holds. I have two stocks, both on the long side. Jubilant Food looks good. Perhaps we can see an up move to around 1380 zones, stop below 1330. And IndusInd Bank possibly can climb up to levels closer to 1540, stop 1507.
Okay, I'll tell you something. The stock of the moment for me really is on the downside, Indiabulls Housing Finance, because this was supposed to be a positive news, and the stock's really selling into this one. And this is, of course, part of that weak NBFC part. The market's clearly now made the distinction between the likes of Indiabulls, DHFL, and of course the likes of Bajaj Finance, Muthoot, etc. So I think that distinction got even more pronounced after yesterday's RBI monetary policy, and that is why you're seeing that trend. And I think Indiabulls Housing really is the one which is now looking very poised quite interestingly. Along with that, let's just pull out DHFL as well, and these two stocks normally move together. Now DHFL of course is in F&O ban, but that one also now down about almost 9% move now on DHFL. And I think Indiabulls Housing Finance also now seeing quite a bit of decline, Latap. That's down.
I'm a little surprised that L&T Finance also is seeing. Is it that people are worried that would they have more pledges?
Would they have more pledges? Yeah, exactly.
I would have thought L&T Finance was best placed to do well today. They've sold off their stake in Reliance probably at par, not made any loss on it. As well, AAA companies, they should have probably gotten an advantage if they're getting loans from banks at a better rating. But I don't know. It's at the moment not giving too much hope on the NBFC front. Even, I don't know, public sector banks, it's such a... I don't think the bond market sold off or anything. Why is it that the public sector banks are so worried? It kind of beats me, unless somebody is believing the India Ratings report that there's more NPA.
Yeah. Ashwini, your thoughts on financials? Any stock that looks ripe for perhaps a short or long trade?
I think PSU banks are weakening, things like, PNB, Canara Bank, BOB. So even amongst the banks, hardly one bank is higher. I mean, rate cut is supposed to be good for banks. So that way, the news is not getting rewarded. And that's where the problem would come in, because DHFL is now down 5 to 6%. Indiabulls Housing is down 4%, mid-cap index is giving up where you have lots of NBFCs. So that way, I don't think the market is quite enjoying its stay above 11,000.
Yeah, absolutely. We'll have to see if 11,000 holds or not. Indiabulls just came and told us that their cost of funds will go down by 50 basis points. Market is in no mood of listening. Also, watch out for the selling that's resumed on a stock like Motherson Sumi. Just tells us the thought process for the morning at least. Stock's down almost 4.5%. Okay, Prakash, we've done Prakash's trades, so I'm going to thank all the technical experts for now. We need to move on to the next corporate conversation. Majesco reported a good set of earnings for the quarter gone by. Healthy top-line growth was seen. Margins also were on the steady side. They improved for the company. It was the first quarter under the new India CEO, Adam Elster, and he is the one joining us now. Adam, good morning. Thank you very much for being with us. Now, you put out some very healthy constant currency growth numbers, but the one question within the analyst fraternity was that a lot of it seems to be coming in from your new acquisition, and there's a question mark on underlying organic growth. How would you address these concerns?
Thank you very much, and thank you for having me today represent Majesco. As you said, we had a very healthy Q3, and we're happy with the numbers. We were very proud of the results we had, and the XX acquisition certainly contributed to our results. And the organic revenue year over year, we were proud of the results. But typically in our business in the December months, there is a little bit of dip in some of the revenue. And with that, we did see no loss in momentum of the business, but rather some one-time slowdowns in some of the projects, but no long-term effect on the revenue.
Okay, fair point, Adam. Good morning to you. Can you give us some more details on cloud revenue? That appears to have given you such a boost.
Absolutely. And again, for us, that's a key part of our strategy for the business and where we really see the focus for us moving forward as a differentiator. As much as our revenue is up 12% year over year, we were most proud of the fact that our cloud revenue was up 66% year over year. And while it's interesting to see that the business was up 60%, 66% year over year, what was very interesting is cloud revenue now represents 42% of our total revenue. And when we look at the mix of the business as we move forward, we believe that that's the key metric and trend that we're seeing that really aligns not just to our strategy, but what our customers and the market demands of us.
Can you maintain this frenetic pace of growth?
We hope so. I think for all investors, the board and employees, I think we'd like to see more. But we are seeing, again, what we see is the market opportunity. So as we speak to customers and they talk about their initiatives, they are very focused on a quick time to value. As much as they've used a lot of on-premise technology and multi-year projects for many years, many of them need to see a quick time to value and a way to leverage the cloud to speed up these deployments. So we're seeing project life cycles go down. So instead of projects spanning over multiple years, they want to span them over multiple months. And cloud technology gives you that capability.
So are these new projects also coming at higher price? And what are customers saying? And what does that really mean for margins? Because your margins have been improving very, very nicely. What should we expect as the year closes out?
Again, to the extent that our business pivots more towards the products and the cloud revenue, those revenues come at a higher margin. So we do believe that margin increases are directly affected with the blend of our business. So as you look at the blend of the business growing towards more of the cloud revenue, that comes at a higher profit. To answer your first question regarding deal sizes are coming down, but so are deal terms. So if you look at a classic model for growing cloud businesses, and there are many examples in the marketplace, it's a land and expand business models. So what you should expect is initial deals are actually smaller, and then as you drive adoption and scale over time, there's a flywheel of revenue that occurs. So what we are actually seeing is less very large deals, one-time deals. We're seeing a larger volume of some of the smaller deals that will drive this flywheel. And ultimately, when you look at any cloud business model, and again, there are many examples out in the marketplace, you'll see it's a matter of adoption and expansion over time. And the good news is that adoption and that expansion comes with very healthy margins over time. And that's the model that has been in the cloud world for a number of years, and that's the trajectory and the strategy that we think is the differentiator for Majesco in the marketplace.
Okay, we leave it at that. Adam, it was a pleasure speaking with you. Thank you very much for giving us so much more details of your third quarter earnings.